John, it's good to see you again on The View. You've just completed what has been seen as a very successful round of client meetings. You've had messages to convey about our outlook. But I want to ask you, what were some of the key concerns that clients had? What were the questions that worried them? Was it that valuations are very high? Was it that, inflation is eating into their spending money? Was it worries about political developments? What were the key concerns that clients had that you observed in these client meetings?
Yeah, okay. Look, I think a lot of it, as you said and suggested, markets are very full. I mean, clients do understand price earnings ratios and yields, and on any measure we're at elevated PEs and very low yields, and there is a bit of a requirement, I won't say concern, but they're looking for yield outside the equity market. So that was a bit of a discussion. They wanted a view on the Australian dollar and international investing, and given my recent letter, I reiterated the point that I think the Australian dollar is really suffering from a lot of selling coming from allocations by industry funds to offshore markets, and particularly US markets. So that's an issue which they needed to understand. Obviously, the American share market's done well. What's the effect of Trump? There's obviously a tailwind, which I went through with the tax cuts. But on the other side, a lot of it's already priced in. So, and Steve Lambert and Will went through the Australian equity market saying, well, the elevated PEs, just like America's seeing earnings growth, which gives you some comfort. Australia's earnings growth outlook short term is quite benign. And you've had a market expand PEs without earnings growth. So I think clients wanted to know how they can hedge against that, how they can allocate across asset classes to take on the risk or hedge the risk, which is becoming apparent in the equity market.
Yeah, I was just looking at the figures this morning. So the US market is up 30% year to date. The Australian share market's up about 18% year to date. But when I look at the US, I see a very kind of dynamic environment. They're growing at 2.5%. You've got Trump in there who's disrupting everything and going to lower corporate tax rate. And there seems to be a lot of energy there. When I look in Australia, it's not so much. There seems to be a lack of earnings growth. The mood seems much more lackluster. What's missing in Australia to create that sort of dynamic growth mood, which seems to be also reflected in the forecast for earnings growth, of the big companies? It's just not there.
Yeah, well, there's no grand plan, there's no vision for the country, and the country's bereft of policy initiatives. I mean, if you think about the only thing we're focused on is a great debate around how we can, move to clean energy in the next 10 or 12 years. I mean, that's it. Not how we can do that and make money and export off the back of it, create technology, create new industries. There's no discussion about that. It's very ad hoc. Outside that, there's nothing. There's, what is the initiative other than building submarines here over the next 30, 40 years, again, which is maybe a faint hope rather than reality. We're not looking at, as I said in my presentation, so I reiterate it again here, about creating Australia as the head office hub for Southeast Asia. There's no reason why Australia shouldn't take on that mantle, just as Ireland did in Europe. It takes visionary sort of politicians and bureaucrats and probably more engagement with business. I think whether you like Trump or not, there'll be more engagement with commercial reality and taking America forward based on, comparative advantage. And if you don't have that advantage, trying to drag it in there through tariffs of some sort of and initiatives like that. Australia really is, we don't have that plan. I mean, we've got a debate going on now regarding international students. I don't think anyone in the voting, any average Australian understands what the debate's about. Are we full up on international students, or are we not? Can we cope or can't we? Is it affecting housing or is it not? Is there a payback? I mean, there's just nothing. So that's my point, Paul. It's hard to get excited when there is no grand plan which business can come behind and engage with capital investment based on a plan for the next 15 or 20 years.
And there's another great example of exactly that force in play with, I saw at the G20 that Keir Starmer, the Prime Minister of the UK, said that he expected Australia to join a fund or a project with the United States to investigate nuclear energy and the use of small modular reactors, which is obviously a very clean energy. And immediately, Chris Bowen, the Minister of Energy, kind of ruled it out, ostensibly for political reasons. It just seems that they're not prepared to engage in exciting new ventures because of political constraints in the domestic market.
What's worse than that, Paul? I mean, we've actually got a policy where we don't dig uranium out of the ground, even though clearly there is a burgeoning market for uranium. Now, whether we want to build nuclear reactors or not, it's got nothing to do with exporting uranium. As we've proven in iron ore, as we've proven in LNG, you can create this, you can dig it out of the ground, you can process it and export it and make income. Now, in iron ore, it's substantially Australian owned and we get the benefit. In LNG, it's substantially foreign owned and we've lost the benefit. There seems to me we have to break the shackles on exporting uranium and do that quickly. If other countries want to build nuclear power stations supplied by our uranium, let them go ahead. And if we can think laterally, rather than keeping it in the ground, export it, charge royalties, charge taxes, and then it's up to the Australian people whether they want to use those royalties and taxes, which we're collecting off foreign buyers, to reinvest in nuclear energy here, or reinvest in clean energy, alternative energy sources, and keep the bloody energy price down in Australia. But we haven't even got off. I'm listening to this debate. We're not even digging the stuff up. That's what I find quite bizarre. And they're two different decisions, but they can be beneficial. The first one of extracting it can be highly beneficial to Australia. It's a different discussion from whether we want to build nuclear power.
Yeah, it seems like we're leaving the field completely open to Canada to exploit while we sit on our hands. John, the RBA has also spoken about the ongoing inflationary pressures, and it seems more and more likely that the market is now dialing down its expectations of a rate cut even in February. So whereas the rest of the developed world's getting on with it and lowering rates, it seems like our rates are going to stay fixed at these high levels well into 2025.
Yeah, but look, there's a lot of double talk, Paul. I mean, we've talked about the Australian dollar, which is weak because of the flows out of the country for our superannuation system. But let's be realistic, and the central bank's not going anywhere near it. A weak currency, which could be weakened further by cutting interest rates, will lead to more imported inflation. The Australian dollar is sitting around 65. The RBA must be panicking. They wouldn't want to see another leg down in the Aussie dollar, which causes inflation or offsets the deflation coming out of China. And that's where we sit. And what we don't have from the RBA is them actually stating that risk, which is probably one of their biggest inflation risks right now. We're getting petrol prices down, the oil prices down, the gas prices are coming down internationally. Australia's not getting the benefit of all that because our dollar is so weak, caused by the international investing our super funds. And I think I can foresee a situation where, given that the industry funds are right in the framework and discussion on a whole lot of bases, that there needs to be some direction of these funds to keep money back in Australia and not devalue the Australian dollar, because that's really against the best interests of Australia. We need to get the Australian dollar firmer so that interest rates can be cut, so we get the dual benefit of lower inflation and economy with a tailwind through lower interest rates. It's hard. I know the Reserve Bank hasn't mentioned it, the government doesn't mention it, the opposition doesn't mention it, but it sits there as, you know, as the covert elephant in the room.
Yeah. Meantime, the news cycle seems dominated by the Trump transition team's nominating process, deciding who to appoint to which cabinet positions. Do you think that the Trump political effect is going to be beneficial for markets through into 2025, or are you worried that there's too much uncertainty and business people are going to be scared to believe in the new administration?
I think the dust is settling really, really quickly.
Yeah.
And the feedback I'm getting and the feedback I'm reading in the press and thought leadership and deep thinkers is, well, whether you like Trump or not, it was a much more viable American solution than Kamala. I mean, and I think a lot of people thought that privately, but weren't going to state it prior to the election. But now the election's over. I think there's a lot more confidence in a Trump administration, which will be pro the American economy. And given the American economy is 30% of the world GDP, that's good news for the world growth outlook outside China and India. So there's absolutely I don't think markets are worried at all about Trump at this stage. I did say in my letter a few weeks ago, my letter to investors, which we'll be distributing more widely, that the question will be whether the bond market and debt market start focusing on the American government debt situation and the inferred interest rates, which are coming through the budget, which based on current interest rates, there's probably a 1% to 2% increase in interest bills or cost of interest coming through the budget next 2 or 3 years. Now, whether the market overlooks that and goes for growth, or whether the market comes back and focuses on the American government debt situation, will be a big issue in 2025. If Trump can grow the American economy out of that problem, that'll be good. If he can't, well, then I think the bond market will lead the Central Bank of America back into quantitative easing. And we know where that takes us, back into inflation, back into asset inflation in particular.
Well, we're recording this episode on the 20th of November, so we've got 40 days till New Year. The market's already done 18% here in Australia, so we've had a good year. I'm sure they'll end that way. What's your outlook for 2025? If you were to, someone put a gun to your head and said, make a figure of what do you think the market will do in 2025, calendar 2025?
Well, it may well go up. I mean, predicting short term is impossible, but I can tell you this, it won't be the banking index which does it again. And that's the big issue. That 18% return substantially from the banking sector, which various stocks in that sector are up 30 to 50%, and that's a third of the market. So you can see the market is substantially driven by the finance and banking sector. And maybe on reflection, or not maybe, it's very rare that the banking index goes up like that much and sustains it in the following year. So question mark will be whether the PEs are sustained despite the fact that there seems to be very little growth coming through in the banking sector in terms of profits, whether those PEs can be sustained and the lower yield than normal, so the banks just hold their prices through 2025 and essentially the whole return is dividends with no capital gain, or whether there is a correction in the bank index. I'm 50-50 on that. I think 50% chance of nothing happening in the bank sector next year, and 50% chance it falls. And given its weight in the market, that does put pressure on the capital performance of the share market, unless the resources sector can take over, because resources and banks, you're talking over half the market. So, are we seeing dynamic companies coming through? There's a few dynamic stories in the healthcare sector. There's a few turnaround stories, no doubt. But with an election coming up in the first half of next year, Paul, Australia's going to be caught in the mud for a while, listening to the diatribe coming out of both parties. And there will be a sugar hit. We know that. The government will bring in some sugar hits for the electorate, but how significant they are on the economy, time will tell. But it's a rather confusing outlook with a mild tailwind coming through for population growth.
All right, John. Thanks for that. I think we'll probably have to end it there, and we'll keep you updated, and we'll see everyone next week and see how we're going. Thanks, John.
Okay.